Welcome back to this week's edition of RHO Market Chat. Well, the usual disclaimer, this presentation is for educational purposes only. There is no inducement to trade. Well, as usual, we'll recap on last week's market chat, and this will be the topic that we are going to dwell in. So last week, I talked about the significance of S&P index breaking down below the 50-day moving average. The last time it broke the 50-day moving average was in February this year, and it turned into a big rout, and S&P fell 35% before rebounding off its March low. And since then, it has not broke below the 50-day moving average until last week. And after we spoke, S&P fell from 3,319 to 3,209, which was about a 3.3% drop. And I talk about NASDAQ similarly. NASDAQ fell from 10936 to 10677, and that was about a 2.37% decrease. So last week, I was a little bearish about the market, but this week, I think we're going to get a reprieve. And the reason was because last week, we had the Democrat retabling the new stimulus deal that a lot of people thought was dead. And that changed the whole dynamics of the stock market, and it adds a new dimension to it. So the new stimulus, all right, I think will dictate where the market is going to head next. But the market was on its way down because a lot of people thought that the stimulus program was dead and it would not be revived until after the US election on November the 3rd. The Democrats and the Republicans have been deadlocked since September on the spending of the new stimulus. They couldn't agree to it. Republicans proposed their stimulus package to be between 500 billion to 700 billion, while the Democrats are looking for a larger stimulus closer to 3.4 trillion. But the lower unemployment rate in August have further legitimized the Republican case of not needing a hefty new stimulus package. Well, the market hope was faded. However, last week, like I said, House Speaker Nancy Pelosi has indicated that she was willing to compromise with a 2.4 trillion new stimulus package, roughly about $1 trillion less than the previous proposal. Well, President Trump seems to have given his blessing to this new proposal, and he welcomed slightly higher spending. And that added to renewed optimism going into this week. So investors, I think they are clearly more bullish because of this news. And that, I think, could give the market a reprieve. And this deal has to be done, all right, before 9th of October, because the Senate will be heading for a recess before the start of the US presidential election in November. Well, if the deal goes through, expect market to rally ahead before the downturn resumes. So I still believe that the downturn have started, but we are going to get a reprieve because there's going to be a lot of money flooding the market again. But in the event there is no deal, the market surely will come off or watch, all right? Watch 9th of October. If there is no deal after 9th of October, what it really means is that the deal will can only be done after the election, and there, the market will possibly tanked because there is no stimulus program or no catalyst holding up the market. Well, the other thing that could add volatility to the market will be this week's presidential debate between Biden and Trump. So watch that president debate closely because it could move the market. So this is how the chart looks like. All right, Nasdaq 100. So it was on the way down. I believe it was on the way down to test the 10,500 mark. But with this new index, all right, of the possibility of a new stimulus program, we will probably see a rebound, perhaps up to 11,600 or maybe 700 region, all right? And that could be a big resistance for Nasdaq, and then it could, resume its downtrend from there. So look at the S&P, it is, firmly below the 50-day moving average and below the uptrend channel line. So it could rebound, all right, on this news. If the stimulus program is passed, it could rebound to somewhere of 3450, all right? So it last trade at about 3268, all right? So it could rebound to 3450, and that will be above the 50-day moving average. So I also want to talk a little bit about gold. So my expectation of gold turning up, all right, after it hits the 50-day moving average was somewhat wronged, all right? So I expect gold to turn up, to resume its uptrend after it hits its support line on the 50-day moving average as well as the uptrend channel line. But it did not, all right? It went a little deeper. Well, I still believe that gold, although it correct more than what I expected, but it is not broken, all right? The macro uptrend is still intact. And the next spot for gold will be at 1800. And I think that the only time where the uptrend, the thesis of a macro uptrend for gold will be challenged will be if it breaks 1720, all right? So you break 1720, perhaps you got to think about the uptrend of gold again. All right, so this is what I have for you this week. Well, we always end with economic data ahead. And for the US economic data, besides the Trump and Biden debate, all right, watch out for the GDP final reading, watch out for the ISM and the non-farm payroll, and for the Chinese data, watch out for the PMI figures, especially the Caixin Chinese General Manufacturing PMI. So this is what I have for you this week. I hope to see you again next week. Have a great week ahead. Bye.